Have you ever wondered why some investors consistently make smart investment decisions while others fail? The key lies in fundamental analysis, a method that digs deep into a company's financial health, its business model, the industry landscape, and the overall economy. It's not about luck, it's about understanding the intrinsic value of a company. In the world of investing, there are two main schools of thought: fundamental analysis and technical analysis. While technical analysis focuses on price movements and patterns, fundamental analysis is about the core strength of a business. It's like choosing a fruit based on its nutritional value rather than its color. Fundamental analysis gives us the ability to peek behind the curtain, to understand the real value of a company beyond its stock price. It's the compass that guides investors through the complex world of investing. Remember, fundamental analysis is the tool that successful investors use to separate the wheat from the chaff. Fundamental analysis is not a guessing game. It's a systematic approach to evaluate a company. So let's dive right into it. First, let's talk about examining a company's financials. This step is all about crunching numbers. We delve into the company's balance sheets, income statements, and cash flow statements. We look at key financial ratios like price to earnings, debt to equity, and return on equity. This helps us understand the company's financial health, profitability, and growth prospects. It's like a doctor examining a patient's vital signs. You wouldn't want to invest in a company that's financially unwell, would you? Moving on, the second step is studying the industry and market conditions. This is where we broaden our scope and look at the bigger picture. We analyze the company's competitive landscape, market share, and industry trends. Is the industry growing or shrinking? What are the barriers to entry? How does the company stack up against its competitors? These are some of the questions we seek to answer. It's like understanding the ecosystem in which an animal lives. A lion might be a king, but not if it's in the Arctic. Finally, we evaluate the company's management, because at the end of the day, a company is only as good as the people running it. We assess the experience, competence, and integrity of the management team. We look at their track record, their vision for the company, and how well they've executed strategies in the past. It's akin to checking the credentials of a captain before boarding a ship. You wouldn't want to sail with a captain who doesn't know his compass from his telescope. So, there you have it, examining the company's financials, studying the industry and market conditions, and evaluating the company's management. These three steps form the bedrock of fundamental analysis. They help you paint a comprehensive picture of a company's true value. And remember, investing is not about following the herd. It's about understanding the value and making informed decisions. Each step in the process of fundamental analysis provides a piece of the puzzle in understanding a company's worth. Remember, fundamental analysis is not about quick wins. It's about long-term investment success. We've navigated through the terrain of fundamental analysis, and now it's time to consolidate our understanding. Let's revisit the key points we've discussed. At its core, fundamental analysis is a method used to determine the intrinsic value of a company. It's not about predicting the stock market's ups and downs, but about understanding the underlying health and potential of a business. It's about digging deep, looking beyond the surface, and understanding the nuts and bolts of a company. Our journey through fundamental analysis takes us through a three-step process. First, we delve into the financials. We comb through balance sheets, income statements, and cash flow statements to understand a company's financial health. We look at ratios, margins, and growth rates to get a sense of how well the company is performing compared to its peers. Second, we examine the company's qualitative factors. This means looking at factors that can't be quantified but are just as important. We consider the company's business model, its competitive advantage, the quality of its management team, and its corporate governance practices, among other things. And finally, we factor in the macroeconomic environment. This involves understanding the broader economic and industry trends that could impact the company's performance. Each step in this process is critical. Skipping one is akin to trying to complete a jigsaw puzzle with missing pieces. Fundamental analysis may seem complex, but it's worth the effort. It's a tool that can help you make informed decisions rather than relying on hearsay or speculation. It provides a solid foundation for your investment strategy, allowing you to invest with conviction. Remember, investing is a marathon, not a sprint. And fundamental analysis is your training for this marathon. It equips you with the knowledge and understanding to make strategic investment decisions that can stand the test of time. Investing without fundamental analysis is like navigating without a compass. It's your key to making informed and strategic investment decisions.